I guess start with the notion that the Fed has had a chance, but it never seems like a good time to do it. And once again, they've maybe got reasons to not do what they need to do.
Yeah, Joe, good to be with you again. The Fed had a chance. It was a year ago, maybe 18 months ago, when they should have started increasing interest rates. They should have started cutting back on their balance sheet. Instead, continuing into today, the balance sheet keeps increasing. We have near zero interest rates. So the Fed cannot have a perfect global situation for it to increase interest rates. That's not the way the economy operates. And Jerome Powell and his colleagues just messed it up. We are in for a much worse situation. As long ago as last October, Joe, I talked about the likelihood of stagflation in 2022, 2023. It was not a popular topic at all last October, but now it's being much talked about. I think it's coming.
Mimi, do you, how much of what Sri just said do you completely agree with, and is there a nuance to your view?
I think there's some nuance. Look, I really agree with the Fed is late. They are still easing. They're going to start tightening next week. Chair Powell really made that clear last week in his remarks as well, that the conflict right now overseas is probably not going to influence their movements. They need to get going. I think we have 6.5 hikes priced this year. I think that that's a good midpoint, right? We can go in either direction. And as for the stagflation, I think we really need to wait that one out, as we're coming from a point right now where the economy is extremely strong and earnings results have been fine. So the labor market's tight. So we really need to wait and see how this plays out as the Fed lifts off. And I do think that they start letting the balance sheet run off this summer.
Sri, we've got, we always have inflation numbers that we're looking forward to, but even more so this time. But even if it's very hot, don't you think you're going to hear, well, of course it's hot with what's happened in the last 2 weeks. So it's going to be discounted, whether it's, is it definitely not transitory, or is it now transitory based on while there's this conflict?
Well, high inflation was never transitory, except in Jerome Powell's mind. It was not there based on economic theory. It is not based on my economic forecasts. And if you think about the Ukraine crisis pushing up oil prices and inflation, recall that in January, the inflation rate was 7.5%. It was a 40-year high, and there was no Ukraine conflict at that time. Even the number which we are going to get very shortly, Joe, is not going to incorporate the conflict, because it was mostly calculated before the war 2 weeks ago began. So we are going to be close to 8% in today's number. And in March, we are going to head toward 8.5. Where is the transitory portion in all this? It is going to be transmitted to other areas besides energy. And that is how the transitory nature becomes a permanent one, which is why I've always taken the position the Fed was wrong. It is going to be even more wrong as a result of the Ukraine crisis, but you can't blame it on Ukraine and Russia in terms of why the prices are increasing at such a rapid rate.